What is the state of the economy right now? There are many politicians and economists who seem puzzled. They seem to point at the economic data and say things right now are wonderful, and the public just doesn't get it. There are people referring to this as a vibe session. And there's an overall questioning saying, hey, unemployment rates are low, inflation is back down from the highs that they once had just recently. There are people really questioning, why is the public so disconnected from reality? Now, on the recession part, they're right. Like, the unemployment rate's historically low and the inflation rates have dropped down a little bit. So we're not, does not seem like we're in a recession right now. Historically, things are great in terms of the past 10, 20, 50 years or throughout human history. In the US, right, our median household income is multiples of what our ancestors would have thought is possible. So there's a lot of, there is some good news there. And hopefully, because of free markets, because of capitalism, as long as there's not too much government interference, 20, 50, 100 years from now, people are going to look back and wonder, how did we live so poor? If we have growth of 2% a year, it's going to be crazy how wealthy people are in 50 to 100 years. But I do think that these economists and the politicians and the journalists who are all saying things are great, the public is wrong. It's not the public that's wrong. It's that these economists, these journalists, these politicians are ignoring many key facts on why people are struggling right now. And I'm going to bring up in this video 6 different facts that I think most people are just ignoring. And these are very real data points on the economy. Before I get to that, if you like this type of economic analysis, please click like and subscribe. Click the notifications bell. My name's Matt Rosu. I enjoy making economic content. It's often with pop culture. This one is not one of those. So let's get to it. What are the experts ignoring? I said 6 things. First, high interest rates are not factored into the inflation rate. In the US, it used to be factored into the inflation rate. Change was made decades ago. And there's reasons the high interest rates shouldn't be factored into the inflation rate. But the cost of borrowing money has gone up dramatically over the last couple of years. So if you are you are borrowing money for a car, if you have a $30,000 car loan at 8% interest, which seems like a reasonable rate for somebody to get now, that's $2,400 you're paying in interest. At 4% interest, which you could have gotten just a few years ago, it would have been half of that amount. So $2,400 is $200 a month. At 4% interest, it would have been $1,200 or $100 a month. That's $100 a month a household is poorer because of higher interest rates. This also affects mortgages and any interest rates where people are borrowing money. That is not factored into inflation rates. So individuals' real income when factoring the higher interest rates is lower than what the official metrics are giving. This is important. So people are poorer than what the official inflation is giving them because of these higher interest rates. That's reason number 1. Reason number 2, real median household income has fallen. So the most recent from Fred, the St. Louis Federal Reserve, amazing online resources for those who want to look up economic data. The peak was at about $78,000 for household income shortly before the pandemic. Most recently shows at about $74,500. That's a pretty big drop, right? That's over a 5% drop. So on average, the median, which is the middle household, half are doing better, half are doing worse. But the middle household is 5% poorer per year than they were pre-pandemic when you adjust for inflation. That's real money. And that's not being talked about enough. Of course, people are upset about the economy. They're not doing as well as they were just a few years ago. this should be obvious, but just pointing to low unemployment rates and not pointing to the actual amount of money people make it's crazy. So second reason, right? Median household incomes have fallen. The third reason, very related to the second reason, real household net worth has not gone up in 3 years. So net worth is the amount of assets minus the amount of debts that a household has. And saying real, this is inflation adjusted. Adjusted for inflation, right now, Americans have the same net worth, the median household, the middle household, as they had 3 years ago. This is a big contrast to what had happened in the Trump presidency. Actually, Wall Street Journal had a good comparison chart, which is on the screen right now, of net worth changes. By this time in the Trump presidency, we were looking at about 15% higher, and it ended at about 30% higher. Currently, since Biden was inaugurated, household net worth is flat. The middle household in America, once adjusted for inflation, has no additional net worth. And that's a reason, boy, a lot of people could be pretty cranky. And remember, this is the middle household, which means half of the households have seen their net worth decline. Half, of course, have seen it increase. But this is in contrast to previous, right, both the Trump presidency and the Obama presidency, when you would have seen, on average, significant growth in net worth, which means the median household was doing well more in terms of their net worth than what we had seen before. That is a third reason why individuals would rightfully be upset about the economy that I think economists, journalists, politicians are all ignoring. Fourth reason, the stock market is lagging compared to what we saw under either Trump or Obama. Right now, actually, the stock market, since Biden has been inaugurated, is at about the exact point of where it was under Trump. However, the market had crashed quite a bit once COVID hit, and then it rebounded quickly. We're actually in that little part where it's still lower because of the COVID, the massive drop because of COVID. The market was doing well, significantly better under Trump at this point in time, and it ended significantly better. And that's this chart on the screen. The next chart actually shows over many presidents, and we'll see under Trump it was much higher, but also it was much higher under many other presidents, most other recent presidents. People expect, on average, stock market will be going up and going up a little bit more than what you saw now, right? People are investing for their futures. They're investing for retirements. The stock market returns have not been what we had seen. So yes, the market's up, but it's not up to the levels we had seen under either Obama or under Trump. So that's a fourth reason why I think we could reasonably expect households to be upset with the performance of the economy. The fifth reason, inflation. We mentioned inflation before and the fact that the cost of borrowing is not factored in, which is a big deal. But even ignoring that, inflation is still higher than what it was in the decade before the pandemic. Current inflation rate as I'm talking, little over 3.25, right? 3.36 is the number that I'm seeing here. A couple different charts we'll put on the screen, right? Basically, pre-pandemic, we were nowhere near 3.5% or 3.33% inflation rates. And just looking over the past decade, it never crossed 3, right? Like before the pandemic, inflation was never over 3%. So this inflation rate right now is still quite a bit higher than most people have dealt with in the past 15 or 20 years. 3% is a lot better than the 9% that it was just 2 years ago, but it's still higher. And another fact related to inflation is this 3.33% inflation over the past year that we've seen. That comes on a higher base price because we had a year with 9% inflation. So if you're taking 3 1/3% inflation after you've already had it go up by 9%, the actual amount is more. For example, 3 1/3% on $1,000, that would be what, $33? But if you had a 9% inflation before and it's worth $1,090, 3 1/3% on $1,090, it's more than $33. It's more than $35. So the price increases, they compound. And so the inflation rate is higher than what we had seen basically in the previous decade, other than this spike. And because of the spike, the actual dollar changes are now higher because we saw the prices go up. So people, inflation's getting better, but it's reasonable to still be pretty grumpy about prices going up. And a lot of this kind of relates together, right? The high inflation is part of the reason the real median household income has dropped, because wages didn't keep up with that inflation rate. And you're reminded of this when you go buy gasoline or go to the grocery store. So I think these are perfectly reasonable things. And that's the fifth data point. And economists will talk about inflation a lot, but they'll often say, well, it's dropped back down to more reasonable levels. Well, yeah, more reasonable than 8 or 9%, absolutely, but not where we had been. So that's the fifth reason why I think people could rightfully be a little bit grumpy about things and rightfully see problems with the economy. The sixth and final reason that we'll be mentioning in this video is the national debt. So the national debt has been going up dramatically. If you're old enough, you'll remember that Ronald Reagan got criticism over increasing deficits in the national debt. The total debt when he left office was $3 trillion. We've had over $3 trillion added in a year over the past couple of years. For some comparison, it was at about $5 trillion when George W. Bush took office. It went from $5 to $10 trillion in that time. The Obama administration, instead of going up an extra $5 trillion, it doubled again. It went up $10 trillion. So it was about $20 trillion by the time Obama left office. It's gone up significant amounts since then, with the current national debt estimates at about $34 trillion. This means significant amounts just to pay the interest on the debt. We're talking over $1 trillion annually, easy. $1 trillion just on the debt. That is $3,000 per American, approximately. That's everyone. That's adults and children. That is money that's being taxed that is not going to any services, which means we're seeing either higher taxes or less government services than we are used to because of the higher debt that we're facing. This one is actually the one that's a little bit concerning because neither political party really wants to address this. That's one of the bigger fears I have with the economy being able to do well over the next 50 years is, can anybody get things together to start to fix this? So I hope you enjoyed this video and the context I've laid out. I've been a little bit frustrated. I think people are blaming the public. And this includes journalists, this includes economists, this includes politicians. And they're pointing to the lower unemployment rate, and they're pointing to the fact that inflation is no longer at 8%. And they're thinking, why is there a disconnect? Things seem to be going so well. And I think those people are overlooking a lot of really important facts. And I shared 6 of them here. Hope you enjoyed it. I know this wasn't the most uplifting video. Usually I'm really optimistic. But to end on an optimistic note, as long as the U.S. stays mostly free and embraces mostly free markets, I mean total free markets, in my opinion, would be better, but mostly free markets avoids the government restrictions on markets. And if the U.S. ever works to balance the budget, I do think, 10, 20, 50 years from now, the average American's going to be doing so much better, they will look back at us and think, how did we live so poorly? I mean, it'll sound like a joke when I'm saying that, but just like we would look back to people 100 years ago and think, how did you live so poor with, the tiny spaces that people would live in and without automobiles, without air conditioning, without all of the things that have been invented? I think the same things will be said, 20, 50, 100 years from now. I do think that's the case. So I'll end with that optimistic note. But in the short term, I do think there's some pain here. And I think it's a lot of very real factors are being overlooked. So I hope you did enjoy this. Once again, please click like and subscribe, and you'll get more content when I drop videos. Until the next time, I'll see you in the next video.